Hi traders, this is Adam House, Senior Account Manager with Forex Capital Trading, hosting the Daily European Open for this Monday, the 18th of the 9th, 2017. Hope you had a good weekend. We'll get underway with the risk events for this week, going to Daily FX. Just go to Economic Calendar, High Impact Announcements. And sorry, just before we do that, folks, just a short general advice warning. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so pretty quiet day across the board today, just while we're waiting for the market to get underway. But we do have a little bit sort of coming up this week, and we'll just go to a weekly view. Okay, so we have very little in the way of high impact announcements scheduled for today, but we come across to the GBP BOE Governor Carney speaking in Washington. That'll affect the pound, obviously. And we're coming up to Eurozone Economic Sentiment Survey at 7 o'clock on Tuesday, followed by the RBA Governor Lowe giving a speech in Perth on Wednesday. Japanese monetary policy statement coming up on Thursday, followed by the very hotly anticipated announcement of the FOMC Federal Open Market Committee rate decision, tipped to leave rates on hold at 1.25% and 1% respectively. New Zealand dollar for the gross domestic product on Thursday at 8:45. Heading across to Friday, we've got Draghi speaking in London on September 22 this Friday, and the Canadian Consumer Price Index at 1.5%, or forecasted at 1.5%. So lots happened in the market over the course of last week. If we go to the previous week, we'll just tail off on what happened on Friday. We had advanced retail sales coming in worse than expected at negative 0.2% against 0.1% forecast. So that's another whammy for the US dollar generally. Remember that we're looking to strong retail sales and strong GDP, strong employment as an indicator of higher interest rate potential, which obviously increases the rate of currency. We speak about that quite a lot. Obviously, the higher rate of interest attached to a particular currency, the better it is. But that sort of figure is not encouraging, obviously, for a bullish US dollar. So the US dollar lost some ground as a result. So it'll be interesting to see exactly what they do. This Thursday with the FOMC announcement, very strongly expected to leave rates on hold, as I said, at 1.25% and 1% respectively. Okay, so there's no real urgency at the moment perceived to raise rates to combat inflation. Remember, inflation has actually been quite poor as well. So we were expecting 3 rate hikes this year, and we've only got 2. So we're talking like 6 months ago, there was 100% expectation of maybe a rate rise in December, but it looks very, very unlikely at this stage with the rates being kept on hold at, as I said, 1.25 and 1% respectively. So some interesting movers in the market. The pound has been by far one of the best performers of late against particularly against the weaker yen. And we've seen the market sort of broadly tail off on the risk aversion that it saw last week and the week before that on the North Korea situation. Now, obviously, gold rose as a result over the course of that latest missile attack that occurred last week. But again, we're seeing a top in the market achieved around the 1350 level, and indeed gold tail off as a result. The yen is a safe haven asset as well, has obviously followed suit against a stronger yen. One of the major drivers, particularly of the pound, was interest rates being left on hold at 0.25% last week, but a lot of members coming out from the Bank of England being quite hawkish on their comments about raising rates with increased urgency. So inflation has been, a little bit better than expected. Economic growth has obviously been, quite good. There have obviously been very terrible events in London of late, obviously over the latest terrorist attack on the train line. It doesn't really appear to have affected the market that much with respect to the pound in general, but it'd be interesting to see sort of investor confidence heading into the London session today. We are coming up against a bit of a daily top in the market, don't forget. The yen is showing some signs of good entry points on the buy. In fact, we did issue a a morning trade, morning report trade of the day today to levels of 152.70 in extension as a target for the pound yen. So it might be one to keep your eyes on. But let's just go through some daily targets on the daily technical levels. The bias remains bullish on the AUD USD with targets of 0.8045 and 0.8060 in extension. We've got a bullish preference preferred on the ASX 200 with targets of 5747 and 5763 in extension. Euro USD being quite a strong performer. The upside prevails to levels of 1.1960 and 1.1990 in extension. GBP USD. We have levels of, and that's actually the pound against the Australian dollar. Sorry, excuse me a minute. Pound against the US dollar. Further targets preferred of 1.3620 and 1.3705 in extension. So that's a big forecast for the GBP USD. Again, on that rising rate sentiment, which has really sort of seen the bullish preference of that pair. So we'll wait and see on that. But yes, there is a very strong indication that could get to levels of 1.3705. Going forward to the USD JPY. Interestingly, when you get buy preferences on these pairs, usually it's a sell preference on the USD JPY, but they have issued a bullish preference on the USD JPY to levels of 111.30 and 111.70 in extension. GBP JPY, as we said before, levels of 151.65 and 152.70 in extension as a bullish preference. We have gold capped by a negative trend line with targets of 1311 and 1308 in sight. And finally, oil on some pretty good, economic data for strong demand prospects and limited supply. Remember that we're still sort of gaining some ground after the hurricanes, which saw oil production being cut. But we do have long positions preferred with targets of 50.15 and 50.5 in extension as well. So a bit of a slow start to the week, but there is a lot happening throughout the course of the week. If you wish to discuss any of the economic events presented today or any extra entry points on the trades discussed, then please get in contact with your account manager, whether it be myself or your respective account manager. We look forward to helping you out through the course of the week. But in the meantime, thank you very much for your attendance, and we look forward to seeing you tomorrow. Thank you.